So how do you plan to tackle this problem of cyclicity, especially when you're just tracking the index? So are these kind of funds really good for the investors for a long term, or is it for a cycle only? What are the demographics of those investors? Are younger? Is the younger crowd more attracted towards passive funds than the elder ones?
It's actually a little interesting.
So how do you plan to tackle competition from, of course, the existing ones and from the newer ones that are coming? Is there a plan at Groww AMC to do that?
Largely we focus on...
Today, we have Mr. Varun Gupta, the CEO of Groww Mutual Fund with us, an accomplished entrepreneur and technologist holding an engineering degree from IIT Madras. In 2019, Groww acquired his startup, where he played a pivotal role in launching mutual fund distribution and the AMC vertical. In this episode, we'll try and understand Groww Mutual Fund's approach to portfolio strategies and fund offerings, the challenges and future of active versus passive fund management, and investor behavior and demographic trends in the mutual fund industry. Hi Varun, welcome to our show. Thank you first of all for accepting our invite. It means a lot to us. So really excited to start this conversation.
Thank you, Kannan, for the invitation. Very happy.
Great. So let me first talk about a fund offering that I think was the first fund offering of Groww AMC, that is the Total Market Index. So Total Market Index, if you can just tell our audience what does it consist of, that is point number one. Second, why not something like a Nifty 50 or a Nifty 500? Why 750 stocks? Like how does it differ from a typical Nifty 500?
This is the time till about 2015, say 2015, 2016 types. And Nifty 50 was the time, was the popular index. People who wanted to take position in index will largely take it in a Nifty 50. But उसके बाद से हमने क्या देखा कि इंडिया में when the growth started, broad market India started growing very well, right? And we wanted to give an opportunity to investors to invest in one fund which is capturing almost the entire India's stock market. तो अगर आप देखें तो निफ्टी 50 covers only about 49 and less than 50% of India's stock market in terms of weightage, but TMI total market index covers 95%, right? So TMI 750 stocks, 100 large cap, 150 mid cap, 250 small cap, and then 250 micro cap funds as well, right?
So
Micro cap stocks as well.
So this is Nifty 500 plus
250.
the next 250 after
next
that.
250.
So it's like Nifty 750 if I can
Nifty
say.
750.
Okay.
So that's why it's called Nifty Total Market Index, because it covers almost the entire stock market of India.
Got it.
अभी जब हमने and our hypothesis was just this, right, that we are launching this in to give a parallel option to Nifty 50 investors कि instead of investing in Nifty 50 or Nifty 500 for that matter, invest in Nifty TMI, because that has the better growth potential, क्योंकि overall growth in India is happening across all markets, across all market caps, which now because it has been a year, we have 1 year performance to measure. जैसे हम लोग अभी for this conversation we pulled out 1 year numbers, and if you look at it, Nifty TMI 1 year CAGR has been 16.85%, while, and this is till this 31st December, while Nifty has only been about 10%, right? So it has given a significant alpha over Nifty 50, and our hypothesis which we wanted to make, for reason for which we made this fund live holds true still.
Okay.
Right.
Got it. So Nifty has more than 4,000, 5,000 companies trading, right?
Yeah.
So why not a larger index, and why restrict to just the top 750?
देखिए 750 में 95% स्टॉक मार्केट कवर हो जाता है
in terms of market cap.
In terms of market cap, and later, so till 750 we are okay in terms of liquidity. Beyond that, if you go, then you always have some kind of a risk in terms of liquidity in the market, right? So that is what we started seeing. Maybe we'll reach a time 5 or 10 years down the line when this kind of stocks will be able to launch a larger broad market index more than TMI. But at this point of time, from a risk return, so as a fund manager, as a AMC, we always keep looking at what kind of risk we are taking to generate what kind of returns. So TMI was fitting well with our risk return profile, क्योंकि उसमें liquidity भी cover आ रहा था. For the last stock which was there, the 750th stock, you go further, the liquidity will start reducing. That's why it was not fitting us well. And it was 95% cover किया, तो you are broadly investing in the overall India. So Nifty TMI is a fund which we believe is a fund जो आप अगर इंडिया में इन्वेस्ट करना चाहते हैं तो this is the fund, not Nifty 50 anymore.
Okay.
I believe it's a little controversial because everyone says Nifty 50 is market and everything, but we believe internally that Nifty TMI represents India much better than Nifty 50 does.
So why were you the first AMC to launch a total market index, and why not any other AMC?
See, I'll tell you two things, right? The first thing is, why was this fund not available so far? हम ही लोग पहले क्यों लेके आए? The biggest challenge for launching this fund was the technology which was required to run this fund. देखिए क्या होता है कि most funds have about 100, 150 or lesser than that stocks, right? So and you don't have to do daily rebalancing. आप quarterly या 6 monthly rebalancing करते हैं. But when you are managing a portfolio of 750 stocks, the technology which existed in the AMC industry so far was it was very difficult to manage such a huge portfolio. And even if you manage such a huge portfolio and you wait for 3 months to do a rebalancing, then this portfolio goes haywire. So आपका tracking error वगैरह बहुत बढ़ जाता है. And you measure two things, which is the standard tracking deviation, okay, tracking difference कितना आ रहा है versus the index, and more importantly tracking error. Now what we did is we developed our own technology. We call it Spear technology in Groww AMC to basically run this fund, to allocate well and do daily rebalancing. We were the first AMC to basically do that in India. और जब हम daily rebalancing करने लग गए तो हमारा, और हमने 750 stocks भी easy basically manage कर पाए, daily rebalancing किया. In such a big portfolio, our tracking error is right now only 0.11%, which itself is a very, very big deal. After we launched, it took us, usually AMCs launch fund very quickly, right? अगर some fund becomes popular, and TMI was quite popular. It is still very popular because जिसको समझ में आ जाता है, they will move away from Nifty 50, or they want to diversify and invest in India, they will invest in TMI. After that, some AMCs did, some AMCs filed TMI, but it took them a lot of time to basically, launch that fund, because they also had to build an in-house technology. It's not possible with the existing technology. So they did that, and now I think there are 2 other AMCs which has launched TMI apart from us, but I will have to check the tracking error. But for us, 0.11% tracking error in such a huge portfolio with so many stocks is very, very decent.
Can you deep dive a bit about the technology aspect of developing TMI?
Sure. So देखिए मैं आपको बताता हूँ how does index investing works, right? So देखिए 750 stocks होंगे, उन हर stocks का there will be a free float market cap. Say you get 10 crore in your fund, what you will do is you will divide that 10 crore into free float market cap of each stock, and then you will buy the number of quantity of stocks which it comes out.
Right.
Now the challenge is that you will buy only in terms of baskets, right? कि आपके पास because every stock will have a certain weightage. So certain weightage of the basket of the index will get created, and that basket is what you go and buy in the market directly. The problem with TMI is it has a basket size of 3.5 crore, which is a very, very high amount. Now in such a case, if you buy one basket, you have to wait for 3.5 crore to be in your fund, and let's say if you have less than 3.5 crore, then tracking error आपका बढ़ता जाएगा, and it is unfair to the investors also जिन्होंने invest किया है, क्योंकि they will not be able to generate returns as per the the pure index. What we did was basically we developed a technology कि अगर हमको सारे without 3.5 crore also if we want to do daily rebalancing, how do we buy and sell stocks, because the weightages are changing daily, and rebalancing can be done daily. And how do you do that so that you remain very, very close to the index? That is the technology we developed. And after that, you just have to give the orders to the broker, and broker will execute, and you will basically get the shares in your account. And then you will be able to do a daily, daily matching against how much what is the actual index weightage and what is your weightage in the fund. So that is the technology we developed. It has been working very, very well. We were the first ones to develop it. I am not sure if any other AMC has it. But it was perennial for us to develop that, to launch something as complicated as TMI. We have been able to do that and able to match the index very well, and that's why our tracking error on a constant basis is very, very low.
Got it. So speaking of passive fund management, what are the challenges you think are there in India with respect to other developed markets, say the US, where we have a Russell 3000 index, like you're talking about liquidity? I'm sure while of course they are a much more developed market than ours, but there would be a fair amount of liquidity concerns even there when it comes to the 3000 or the 2500 stock over there in the US. Why are they able to run a Russell 3000 index with a decent enough standard deviation and tracking error as that of the index itself, and we are not able to do that in India? What are the challenges you think are there in India?
See, it's largely liquidity. देखिए अगर आपके if the stocks have liquidity, then you will be able to create any If the 3000 stocks have liquidity, then we'll be able to create an index. Till now, the problem was technology, which we have been able to solve with our own proprietary Spear technology. Now, if the 3000 stock also has liquidity, we'll be able to launch a fund which tracks all this. So it's largely just liquidity concern. But the biggest challenge, which just a little digression to the question which you are asking, is why is passive investing very popular in US but not as popular as in India, right? Like you see, everywhere in the world, if you look at it, any investing is an advisor driven market, right? And we basically believe that in India, if investing has to grow, you need more and more advisors, right? DIY investing is also good. A lot of people invest via DIY, but you also need advisors to invest. In US, what happens that if a person is investing in passive, then also there is an advisor and he will get paid on the overall AUM which he is investing via the advisor, right? And there that model exists for a very long period of time. I think about 60 to 70% of US population invest actively, and those advisors keep getting paid. In India, unfortunately, passive investing is not a very advisor friendly investing, right? Because the commissions are lesser, the overall TER is capped at 1%, right? So advisors don't really prefer that. And also Indian investors' need are a little different, right? Investors, there is along with passive, there is also significant alpha which continues to exist in Indian market, right? Which does not exist outside. In US, the markets have become very democratized. So advisors also prefer active investing because of this two factor, and that's why passives are yet to really take off in India. While the overall share is increasing, largely driven by more institutional investor and very learned independent individual investor, but the large market retail investors are yet to adopt passive very actively, which is okay, right? It will take time for this adoption to happen. It will take time for the changes to happen. It will happen over a period of time. I think in 15 years it will happen, but it is a little early for passive to become very big in India.
So talking of numbers, in India currently it is close to 19% that the proportion of passive AUM to total mutual fund AUM is around 19%.
Yeah.
But that has largely been driven by the EPFO inflows.
Also, yes.
Speaking of US, it hovers between 30 to 35%, 28, 29, 35% in between that, depending on the market cycle. Do you see this number increasing from 19 to 35 in India as well in the 15 years?
Very interesting question. See, there is definitely tailwinds. There is definitely more investors, like the new investors which are coming, young investors, more learned investors are preferring to do passive investing. But as I said, we believe there is still significant alpha which exists in the Indian market. Like I was just looking at some numbers, in just last 1 year, 80% of the large cap funds have beaten the benchmark, right? Similar numbers for mid cap and about 60% for small cap funds who have beaten the benchmark in the last 1 year. Right now, the overall tenure for which people look at returns, like earlier they used to look for 5 years, right now I would say 1 year and max at 3 years is what we should look at. So there is significant alpha which still is generated by a lot of funds. As long as that exists, right, passive investing will not really take off. Second is, of course, it is an advisor driven market everywhere. So passive has to become more advisor friendly, and regulators have to play a role there. Our markets have to play a role there. That is second. Third is also in US, there was a basic need for passives to play, right? Because there is a major fallacy in the US, the way markets operate, is that when you invest in an active fund, right? In India, if you invest in an active fund and whatever the fund buy and sell, you don't incur any taxes based on what the fund managers have decided, what the fund is doing. In US, it is not like that. If an active fund buys or sells a stock, whatever tax is incurred is passed on to the investor, right, which does not happen in a passive fund. So that's why it's much more easier, much more convenient for them to manage passive fund. So that's why there are a lot of big advantages which US have about growing of passive funds, which I am not seeing that in India. While there are some investors who like passive funds, but the kind of growth which you saw in US market, where passive is almost as equivalent level to active, is something which is yet to be seen in India. And I am not very, if you ask me, I am not very gung-ho about it, because I am an advisor, right? I come from as an advisor background. I also prefer that every investor should have an advisor, right? And as long as passive are not very advisor friendly, it's okay for passive not to be adopted, and only to be adopted by people who want to invest in passive or understand passive.
You have launched you have launched various passive and thematic funds, like you have launched EV fund, you have launched another railway fund of late, then there's another thematic fund that you've launched. Our research shows that typically the funds that rank in the top 3, top 5 categories amongst all actively managed or even the passively managed funds after expenses tend to underperform significantly in the next 3-year subsequent period, because a 3-year period is typically a cycle. We saw it in IT, like until 21 it was the market darling, but since then it has not performed well. And similarly, we are seeing a similar trend playing out in defense as well. So how do you plan to tackle this problem of cyclicity, especially when you're just tracking the index? So are these kind of funds really good for the investors for a long term, or is it for a cycle only?
No, so that's a very good question. देखिए हर जिस भी टाइप का आप इन्वेस्टमेंट करेंगे देयर विल ऑलवेज बी सम लेवल ऑफ सिक्लिसिटी एंड देयर विल बी वोलेटिलिटी टू द फंड, राइट. जो आपने बोला दैट्स लार्जली ट्रू फॉर एक्टिव फंड्स. अब मैं उसका रीज़न आपको बताता हूँ. देखिए क्या होता है, द वे एक्टिव फंड्स आर मैनेज, मोस्ट ऑफ द एक्टिव फंड्स, मेजोरिटी दे फंड मैनेजर्स आर फॉलोइंग अ सर्टेन अप्रोच, राइट. नाउ दैट अप्रोच वर्क्स सर्टेन टाइम, दैट अप्रोच डज नॉट वर्क सर्टेन टाइम, बट व्हेन इट्स नॉट वर्किंग यू डोंट चेंज योर अप्रोच, यू कीप योर अप्रोच कंसिस्टेंट, राइट, क्योंकि देन देयर विल बी टाइम विच विल कम व्हेन दैट अप्रोच विल वर्क. So there is, even the diversified equity funds goes through some kind of cycle, and that's why the role of a wealth manager or your financial advisor becomes very, very important, because then it will make you jump into the right stock, right fund at the right time. So there is a cyclicity in diversified funds. But when you talk about thematic funds, the cyclicity is much more paramount, right? Not just thematic, I'm talking about sectoral funds. So जैसे आपने IT का example दिया, ऐसे BFSI का भी example है, ऐसे PSUs का भी example है. PSUs were the darling of the stock market some time back, and now they're going through a downturn. So what we advise our investor whenever we launch a fund, we look at the valuation. जैसे अभी हमने railway fund launch किया है. So railway funds में जो top stocks है, they are down by about 30-35% from their peak valuation. Right now the PE of the fund is about 28. We believe the valuations are right for this theme to basically play out. Also, more importantly, along with the valuation, we believe in the long-term growth potential of this theme, because Indian government is investing a lot in railways, both for passenger travel and logistics, and there are big things planned, like Vande Bharat is there, Amrit Bharat station scheme is there. From the freight side, there is National Railway plan which is there for Vision 2030. So there are very, very big things planned. So we know that in the long term there is a good growth potential. The moment of the stocks have gone down a little bit, and the right time to invest is only when the valuations have come to a normal level. And right now we believe in, at least in railways, those valuations have come down to central at a right level. Having said that, we will not be right 100% of the time, right? As a fund manager also, there can be some rally which might be happening. We will be, most of the times we'll be wrong, we'll be right at a long term value, but from a short term value, short term stock pricing movement, anything can happen. So we always say that do your own risk profiling or consult with your financial advisor in things like this, which are thematic, sectoral. This should not be part of a core portfolio, which should be 70 to 80% should be your diversified equity funds, which, as I said, are again cyclical, but consult with your financial advisor. And the other part, which is the strategic and tactical portfolio, or the satellite allocation broadly, which we say, can be composition of this railway plus EV, which are long term things, which will give you which will give you returns over the period of long term, but can be short term volatility driven in, can be short term volatility in this kind of sectors.
Got it. So largely you are saying that the kind of funds that you are releasing is after a well thought out process, that they'll also play out in the subsequent 10-year process or 20-year process as well.
But we also try to keep a check कि short term में भी valuations are not oversized, right?
Following the principles of QGARP that you are telling.
Yeah, जैसे defense भी हमने जब launch किया, तो it was defense funds had come down, right? The stock was not very significantly overpriced, like it was down from its peak valuation. So there also, while it is currently, I think at almost similar kind of like it's a similar level at which we have launched. It's been about 2 months, but we believe that the valuations are right now justifiable with the kind of growth potential the sector has.
Since you spoke about budgets that have been made and the plans that the government has with respect to various themes that you are investing in and launching new offerings of, we've seen that whenever the government budgets, and this is not government specific, this happens across governments, right? So whatever has been allocated in the budget is not allocated in actuals, right? We have seen a major deviation happening many a times. How do you plan to tackle this problem if the actuals are not met as they were budgeted? That's point number one. And second is that how sure are you that the themes that you are launching will also be, will also play out in the actuals rather than just being in the budgets itself?
Sure. देखिए बहुत interesting question and the reason largely what we look at for we see when we evaluate a theme or when we evaluate a strategy, budget is just one of the variable for us, right? कि budget में कितना उसको allocation मिला is just one of the variables. We look at large number of variables. One of the biggest variable or parameter which we look at कि customer demand कितना है, right? How is the trend for that sector happening? So let me give you an example for railways, right? Because it is much more pertinent. So we looked at data from 2001 till now, and if we leave the COVID period when the travel went down and the logistics, the transport of the service of the goods went down because of the lockdown. Every year railways revenue has increased, even including the time when there was an economic downturn. 2008 to 2009 there was a downturn, the railway revenue increased. 13 to 14 railway revenue increased. 17 to 18 railway revenue increased. And the number of passengers traveling each year has been either consistent or going up, right? Like last year there was about 6.7 billion passengers which traveled in railways, right? This year the target is about 8.2 billion. The freight was 1.5 billion metric tons. Abhi 1.58 ho jayega is saal. So there is a growth which is happening in this sector year on year. Now government also has big plans for tackling this, right? Government, if you look at other things, like if you look at the condition of the road and other things, railway mein काफी improvement हो रहा है. Vande Bharat as a train has done really well. There are more than about 66 Vande Bharat trains, and government has plans to make 4,500 Vande Bharat trains by 2047. Amrit Bharat station scheme has already started playing its role. Some of the railway stations have started getting the modernized look for which it was, what it was aiming for. Bullet train is expected to be completed by 2026. Logistics is very interesting because logistics लोगों को पता नहीं होता है, but रेलवे का जो revenue है 72% comes from logistics, like जो transport जो करते हैं goods का, and in that overall it is fitting very well from overall government's objective, right? So government objective is that they want to bring down the logistics cost, overall logistics cost in India from 13% of GDP to 8% of GDP. The biggest way they will get is by increasing the share of railways in the logistics, because railway is the lowest cost of freight transport, right? Out of railways, waterways, airways and road, railways is the least, and they want to take the railway share from 27% to 45%. So because of all this and the vision the government has and the plan which government has, we are very confident that even if the 100% of budget allocation is not there, there is a strong tailwind from a customer side and from a demand side, from India's side, and that's why this sector will keep on growing. The question is, will it grow as fast as the other sector is growing, or is this the best opportunity? That is not something which anyone kind of knows. Or for example, if you ask me, we have also launched an EV fund. If you ask me, is EV a great opportunity, is EV a better opportunity, or railways a better opportunity? So that question remains that answer no one really knows, because EV में भी आप देखेंगे तो काफ़ी customer demand है, right? The number of EVs which you see on the road, government plans to increase EV penetration. We are seeing globally also EV penetration has become very high. So EV is a long term theme, but which one is a better theme is still a question to be answered. So I basically suggest customers or our investors to allocate equally in both of them if you want to play out the long term themes. Coming back to what you were saying, the risk in terms of the budget allocation to government is kind of mitigated because these are strong tailwinds from a customer perspective and from an economical perspective.
So Varun, since this is a railway PSU fund that you have launched, right? There is an increasing competition between the private sector when it comes to logistics and infrastructure, between the private and the PSUs, right? How do you plan to tackle this with this particular fund? How bullish are you on PSUs so that you have launched a fund specifically on the railway PSU side that private ones won't be able to, compete the PSUs over here?
Yeah. See, देखिए, generally if you look at globally, railways is considered as a public goods sector because it is important for the public connectivity, economic development of a country, right? So largely, either railways is completely state owned, completely government owned, or there is a PPP model. But there is a significant government oversight which happens in every country on railways. That is what we saw. Now, because of this, we believe that in PSUs in India, so the way the index is constructed is there is 80% core allocation. Core allocation means these are the companies which are completely owned by Ministry of Railways. So companies from different sector, but comes under one theme that they are completely working only for modernizing or improving railways in India.
Got it.
So that's because of these two factors, we believe ki PSUs will always have an upper hand for any budget allocation for any growth of railways in India, and that's why we believe ki PSU fund, railway PSU fund is better for anyone who wants to play out the railway theme. Having said that, we also follow a strategy in Groww AMC that we want to keep giving opportunities to investor to take a very specific position. जैसे अगर आपको रेलवे में अभी तक आपको इन्वेस्ट करना था तो द ओनली वे यू कैन हैव डन इज बाय अ स्टॉक, एंड स्टॉक्स यू नो आर इनहेरेंटली वेरी रिस्की, राइट, बिकॉज यू हैव टू ट्रैक अ स्टॉक, दे गोज थ्रू डिफरेंट kind of cycles, right? So it's better to invest in the overall themes.
So Groww, which is the parent company of Groww AMC, is the largest stockbroker in India in terms of active customers. Do you, what is your client acquisition strategy customer acquisition strategy at Groww AMC? Does it flow from Groww as well?
Not necessarily. Like,
Okay.
see, of course, there is a brand respect for Groww, right? We have
Right.
worked hard to create that brand identity by being very, very true to our customers, by being completely transparent. So the same ethos, same values we take in Groww AMC as well. We are very transparent when it comes to launching which kind of fund we are launching in our operations. We are very customer focused. We try to try to improve our customer experience wherever we can. Simple things like after NFO, it takes about 14 days for many AMCs to do allocation of the fund, but we try to do it within 3 to 4 days, right? So that you can start investing more or redeeming depending on whatever your comforts are. So the same ethos we carry. From a distribution perspective, we are available across, right? So wherever there is, right now we have launched Railway PSU Index and ETF. We are available on all online platforms. We are available with all financial advisors. The idea is that with our ethos and values, which is like, be very customer centric, be very, creating value for the customers. We are carrying that and we are being present wherever the customers are. Wherever you want to invest, you can use any of the platform to basically invest. There is no grow focused distribution strategy we have.
Got it. So speaking of your current customer profile, especially in the TMI and the other index funds that you have launched, ETFs that you have launched, what are the demographics of those investors? Is the younger crowd more attracted towards passive funds than the elder ones? Or how is it like, if you can?
It's actually a little interesting, very interesting question. See, just to give you some background, till about 2018, the average age of investors in mutual fund in India used to be 37, 38.
Right.
फिर we launched Groww and we got a lot of investors, people became aware because of us and started investing. So the average age of investors in India currently is about 27, 28, right? Because we got a lot of young investors into the market. But the kind of funds we are launching is still appealing to people who are between 30 to 35 years of age, right? Because TMI as a concept is a little complicated, right? If we wanted to launch funds for young investors, we could have launched, say, Nifty 50 or Bank Nifty, simple indexes. But we are launching funds which are more sophisticated, which are for people who want to seriously create wealth. And for those investors, we are largely appealing to 30 to 35 kind of age bracket. It is not that it is not by design that we wanted to target that user. It is just by our output that, that the kind of funds are easier to understand for people who have crossed a certain age threshold. I would say that young investors are also interested, but on an average, we are about 30 to 35. Because that is where the real thought process of creating wealth has started, starts from any individual.
Right, correct. So 30 to 35 is at Groww AMC, right?
Groww AMC.
Groww AMC level, got it. So there are more and more number of AMCs that are, while of course the number is still under 50, but many stockbroking entities or even PMSs are coming up with their own AMCs right now. So how do you plan to tackle competition from, of course, the existing ones and from the newer ones that are coming? Is there a plan at Groww AMC to do that?
See, usually, to be very honest, at Groww we don't look at competition. We respect them. We try to understand what they are doing. We have a lot of respect for competition because overall India is a very under-penetrated financial services market, and whatever they are doing, they are trying to increase the penetration. But largely we focus on our end customer, right? We focus, are we able to create value for the end customer? Are they getting benefited from what we are doing? Is there something, even a small delta we can do to better their experience? How can we a little bit more transparent? How can we a little bit more customer friendly? These are the things we think day in and day out. These are the things which don't let me sleep at night. Competition, I would say, is a byproduct. Whatever we do is because of our investors or because of our financial advisors and partners. So that is what we keep thinking about day in and day out. That is what has led to our success in other businesses we have launched, be in the mutual fund side or in the broking side, and that is what we are doing at Groww AMC as well. There is nothing different from from a fundamental perspective. So honestly, we respect our competition. We observe what they are doing. Is there something we can learn from them? But not much worried about what competition is doing. We are just talking to our investors and launching things, launching funds, trying to reach out to them in a very transparent way, communication in a very transparent way. Once they become our investors, keep communicating to them in a very transparent way. That is what we focus on.
Got it. Speaking of, again, your passive funds, a very important factor in terms of competition is the expense ratio.
Yeah.
And largely it boils down to tracking error and the expense ratio. While we already spoke about how you are tackling tracking error, but how do you plan to keep your index funds competitive in line with the market and reduce the expense ratio as much as possible?
Yeah. So see, expense ratio has two parts. One is the operational expenses of the company, and second is how much is the management fee which you are charging. So their operational expenses are usually a little higher for a new AMC. When I say little higher, it's like 5 to 6 bips or 0.05% higher usually, because early days you don't have so many customers, you don't have so much AUM. So that is where our expenses might be a little bit higher, but on management fee are very competitive versus any other AMC. And at overall TR level, we will be right in the middle. We are not overcharging or not keeping our cost high, not keeping our cost low. So we'll be in the right right in the middle. Or ideally, over a period of time, we want to keep bringing our TR down. As our AUM grows, as our number of investors grows, we would like to keep bringing our TR down to increase the number returns for our investors.
Got it. So thank you so much for watching this episode. If you like it, do share it in your circle.